Hey everyone, and welcome back to the Cocoa Nomad channel, where I talk about financial and location independence and give tips, tricks, and techniques to help you make a living and a life. And in this video, I just want to update some of my experiences and my newfound sort of venture into investing. As I mentioned in some previous videos, this is a new angle for me, trying to learn a bit more and experience a bit more and increase my investment income and increase my passive income so that I can have a little bit more balance across my income streams. And I started doing options trading. And with options trading, I'm using some very simple strategies to sort of generate a steady form of income using some of the capital I'm earning from my other income streams, basically my full-time income and my consulting income. The other streams aren't really that large. They're really small, so they don't really generate enough for me to try to invest. But I wanted to see what effect this would have on my overall financial picture and how it can help me reach financial independence. So I'll drop a few links inside of the description where you can see links to some of these other videos, examples such as highlighting and explaining the 7 streams of income that I'm working on. And I'm getting an early start because it's 2021 and I'm working on these streams for 2022 and beyond. And then another one called how I'm using the 10% rule of side income. And this side income, in this case, I'm talking about trying to build up initially the 10% is the investment income, this passive income stream via investing. And so just a quick disclaimer, I am very new to this. I would not take any of my actual trades, anything as advice at all. Like, I'm not a financial advisor. I'm not a fiduciary. I don't have a relationship with you anyway in that regard. So just for educational entertainment purposes, you can follow along, and I'm just sharing my experience. So just a bit of caution. Actually, I would caution you about taking advice from anybody on the internet regarding your finances. Work with a professional and take your time and do your own research and learn on your own and do the things that feel comfortable for you. And I say that because I have a couple of friends and we talk a lot about the different things that we're doing, and none of us are actually using any of the same approaches to investing. We're all doing something very different. And we talk about it. We talk about the pros and the cons and we share our progress, but you got to find your own way. You got to make your own way. You can take insight and maybe get an idea from somebody else, but I would really caution you to just, do your own thing, do what makes you feel comfortable, and make sure you're doing it with the knowledge that you acquired, not just something that someone else said that you heard on the internet. So again, this is my first month trading, and I've been using what is called the wheel strategy. And the wheel strategy with options trading is basically the combination of 2 techniques: selling covered calls and selling cash secured puts. And so in each of these, I have to put up some form of collateral in selling these contracts. And a contract is quite simply an agreement between a buyer and a seller to buy or sell 100 shares of a particular stock by a particular date at a agreed upon share price. And so for me, I'm only doing selling. I don't do any buying. There's just too much risk involved for my taste, and I don't really have any interest in getting involved with that. Whereas the selling is, I'm always the person that's determining the contract details. So I'm picking the strike price. I'm picking the expiration date. So I have a lot more control over the terms and what's going to happen. Now, I can't control the market itself. I have zero control over that, but I can at least go in controlling the terms of the options that I'm selling. And for selling those, I collect a premium. And that's my primary focus with this. I'm looking at stocks that I either want, mostly the stocks that I want to own long-term. There are some that I don't mind if they get called away from me. There are some that I do mind if they get called away from me. And we're going to talk about that because that's my biggest lesson that just happened. And let's get into that. So my expectation was this. The market has been trading relatively flat. It's not having like the big gains that it had last year and in the beginning of this year. And so stocks are pretty much trading like they're going up and down, but they're not going up and down a lot most of the time. And the market as a whole is doing the same thing. So I've been picking some stocks that I look at and say, okay, these things have been trading relatively flat for like the past 3 months to even a year, 3 to 6 months. I'm like, okay, I feel comfortable. Unless something's on the horizon, I don't hear any news. I'm not reading anything that makes me think that anything is going to drastically change. Now, some of these I'm long on, and I think long, or I should say bullish on. I think they're going to go up. I just don't think they're going to go up drastic. I don't think any of these stocks are going to go to the moon, as they say, in the short term or even in the long term. It's like, okay, steadily over the next 3 to 5 years, it's probably going to gain about 25, 35, 50%, something like that. That's why I want them. But my way in is to use this wheel strategy. And the market trading flat is actually great for the wheel. It's like, it's a great strategy. That's where this strategy works. So, and my challenge was previously, if you look at my previous investment report, which I'll link to in the description, I share some of my frustrations because I really wanted Ford, right? I really want this Ford stock, and I've been following it. And I was like, okay, I think the share price is going to rise. It's just not going to shoot up. So I started trying to sell cash secured puts on it. And I was never getting assigned. Like, I was just like, wait a minute, what am I doing? It's like, why am I not getting assigned? And I'll talk about why I think that's the case a little bit later. But I ended up just going ahead and buying 100 shares because I was like, you know what? I'm just going to buy them, and then I'll sell the covered call against those shares. And that strategy isn't the wheel. That one's actually called a buy right strategy because I buy it and then I write a contract on it to sell the covered call. So it's kind of coming into the wheel from a different angle, just straight up buying the stock. So I thought this past week that I've had these options open would be more of the same thing. I was like, okay, just gonna market's trading flat. I picked what I thought were reasonable strike prices for everything. So I'm just gonna collect premiums this week. It's like second week of the month, not getting ahead of myself. I mean, the beginning of the month was great already. I've been having, pretty good returns. So let's just like take it smooth and steady, the rest of the way. Then reality hit. So it's like, okay. And the reality is I got assigned on every single one of the options that I had out there. I had about 6 contracts, I think 6 or 7, and they all got assigned. 2 of them I was selling, one of which was the Ford. And then 4, I was selling selling puts. So I was selling calls for 2, which were stocks that I already owned. And then there were 4 for stocks that if I get assigned, I would be buying those stocks. And I'll share on the screenshot the results of those assignments. And you can see the difference in where in the sells, I'm actually receiving receiving cash because I sold those. And then on the puts, I'm actually buying because the contract says I'd agreed to buy these at this particular price at this particular strike price by this expiration date. And that's exactly what happened. So I didn't expect them all to get assigned during the week. There were some where I was in the money, like I was in the money, and I could have closed out those and just kept the premium, and then wouldn't have had to either sell the underlying shares or buy the shares as a part of the contract, which is also another benefit that I like about this approach, is that I'm not, because I have a lot of level of control in writing the contract, but then I get the bonus of, if the deal is working my way and I'm already experiencing some profit, I can go ahead and close that out. I can buy the contract back at a lesser price and just keep the difference in the premiums, which I had done previously, which is how I ended up writing these contracts this week, because I sold previously contracts, took the profit. And this week, I just waited. I wanted to see what would happen. He's like, mess around and find out. Well, I found out. So let's dive into the pros and cons of what actually happened. So looking at the pros is that I got to keep the premiums, right? So the premiums total $439 for all of the contracts that I had that expired this past week, yesterday, Friday. $425 of that were actually from options that I literally wrote this week, starting on Monday. I started writing them on the 11th, and I think I wrote 2 or 3 on the 12th, maybe even one on the 13th. So in that 3-day period, I wrote most of these contracts that expired. I think I had 1 or 2. The Ford contract was from before. I actually had sold that covered call a while back, immediately after I bought those shares last month. So bonus is like I said, even if I get assigned, I get to keep the premium, whether I sold the covered call or sold the cash secured put. In each case, no matter what happens, I get to keep the premiums. So $425 from the past week, for me, it's great. Not bad at all. Not even mad at it. So I will take that and put that in the win category. But in terms of cons, it's my 4 shares got called away. I don't have them anymore. So now I've got to go back out to the open market and buy 100 more shares of that Ford stock, or I can actually write a cash secured put at a particular strike price to get those back. And the other con is some of the share prices are below what I paid as far as the strike price. So the current trading price is below the strike price. But they're not below my cost basis, because remember, when I'm calculating my cost basis, I do take into account the premium that I receive. So I'm still ahead in those terms as far as like the actual cost basis for those particular stocks against the current price. And some of them, again, I'm positive about, and I think they will go up in the future. So I was just trying to hedge and get them at a discount. And I was employing a strategy this time of buying in the money, which means that I was actually when I'm selling a cash secured put, I mean, I'm writing a contract where I think the price is going to be down here, and people are buying it because they want to hedge against the loss. They think the stock's going to go down. I actually think it's going to go up, but I'm selling basically insurance. It says, I'll buy these stocks from you if it goes below this point. And they're like, okay, I've got some protection, and they buy that from me. Well, this time I actually went higher in that price, which got me more premium, which contributed to the amount of premium collected, but that price is higher. So it gave me less room for that price to go down, and they're able to sell at a higher price. They'll buy at a higher price when the price goes down, because then I have to buy that from them. When I sold that, I'm selling the option, but I have to buy the stock. And that's exactly what happened. So I wanted to experiment with some in the money calls and in the money puts this time, just to see, one, at what point would someone exercise? And I found that in each case they exercise. And I had heard, again, this is why I say don't take advice from people on the internet. I watched a ton of videos, and I'd heard so much that, oh, these options are rarely exercised. They're rarely exercised. Oh, you're rarely exercised, even at expiration. Well, that in my experience, that's not necessarily true, because all of them got exercised. So that's that lesson that I'm taking from this, is that, again, just because someone says it in their experience, and I'm not saying they're being dishonest, in their experience, that may actually be true. But that's also depending on where they're setting a strike price, right? If they're setting their strike price in certain places, yeah, a lot of times they can't exercise them anyway, because it hasn't fallen below or risen above the strike price that you've set. But when it is in the money, and I've had some that were in the money only by a couple of cents. And so I thought, oh, it's 15 cents. Like, no one's going to do that for 15 cents. They'll do it for 15 cents because I got to sign for all of them. So that lesson for me then is selling. I need to really be careful when I select my strike prices. And I can still do in the money, but I only want to sell in the money if I absolutely want assignment, which means I either absolutely am okay with the stock getting called away from me, like Ford, which not really. I should have picked a higher strike price, because it didn't go above $16. It actually, I sold an option at $15.50, and it's currently trading at like $15.52. So again, or $15.57, it's right over, and it still got assigned. So, but for the ones where I sold the puts, they went below. Some of them barely went below. So if I absolutely want assignment, then I will continue to do an in the money strike price. If not, I won't do that anymore. And then the final lesson is just to close out the profitable positions early. I should have just closed them out. Had a couple that would have been profitable. And this is in the case where I'm like, I can take it or leave it with the stock. Like, I don't mind owning it, but at this point, I'd rather just take the premium, and I can still use my collateral to do something else, whether it's to sell another option for the next period, or I can use it to sell covered put, cash secured puts on another stock or for another period. Because again, it can just like collect it. And I'm doing quite a few weeklies right now. I'm trying to learn and see, because again, I hear some people say monthlies are better. Some people say weeklies are better. I want to find out for myself in my portfolio and what I'm choosing. Is it better to do weeklies or monthlies? I'm actually doing both. So I can get a comparison to see how, looking at the monthlies, looking at the weeklies, looking at how long of a period I'm actually having these options open before I close them out, to get an idea of profitability and how well any of these techniques work. So learn the lesson. Wasn't bad. I mean, it's not like I lost money. My account is quite the opposite. Money came in, money didn't go out. So lesson learned, going to take this lesson, move forward next week. And that's what I'm doing. I'm looking at next week's options. I make a list, I have a watch list, and I just look at it and see based on stuff that I've heard, based on stuff that I've read, based on the selection of stocks I'm already watching and having my little pool, and just say, okay, is this the time to do something with this particular stock or not? So, or sometimes it's time to wait, you know. I'm going to sell any of the stocks that I don't want to keep. I'm not really sure that that's going to happen because, like I said before, all of these I don't mind holding, and I may just hold them. I don't have a strong need to sell them, other than if I want to use the capital for another option play in the following week or the following 2 weeks, and I think it can be more profitable than holding the stock in the short term. But I kind of want to be careful with that, as I don't want to chase short-term gains and risk losing long-term gains. So if you get my, but since these are weeklies, and I don't think any of these stocks are drastic stocks that are so volatile they shoot up. I think either one right now, but I still could be wrong, because I was wrong about a couple of my strike prices this past week. So, and third, I got to get that Ford back. As I said before, jokingly, this is the closest I'm going to get to having that truck. I really am in love with that Lightning electric F-150. So I have a kind of in my mind, it's my F-150 Lightning fund. So I definitely want to get it back. I just haven't decided whether I'm going to do another cash secured put, like an in the money cash secured put, to ensure that I get assigned and get those shares back, or if I just do an outright buy right. I just buy it current price on Monday morning and then sell a covered cash secured covered call, sell a covered call against those stocks, and I buy it. I'm gonna have to do a little bit of look at the options chain, do a little bit of math, and then figure that out for myself, what I feel comfortable doing. So there we go. Just wanted to share this because I really want to be transparent about the journey. I really want to share how these things are working. A lot of times I get really frustrated because I don't think people that talk about their investment vehicles and their finances and things like that, and they're giving you advice, that they don't share everything. They're not they're like, oh yeah, I'm winning and gaining, and they never share the losses, they never share the bumps in the road, they never share the hurdles. It's no, tell me about your losses too. Tell me about the things that didn't go the way you wanted them to go or didn't expect them to go. Now, that being said, I know it sounds like, well, I'm still not losing any money, so what's the problem? I mean, if the stocks continue to go down, I am going to be overall, I'm going to be taking a loss. So that's still a downside there that I do have to watch out for. I'm trying to choose stocks that I'm positive about, and I think they're going to go up across the board. So I tend to only trade relatively flat. If they're relatively flat and it's moving up or down $1 or so, I don't really, it doesn't bother me. I mean, because over the long term, I think they'll be fine. If I'm really worried about something and it looks like it's going to go down, I'm going to cut my losses and sell it, and then just don't mess with that one again, or unless something fundamentally changes with the company to get some new. There's a company right now that did that. They have a new CEO, and I'm just waiting to see what happens with the new CEO, and maybe wait a quarter or two to see what kind of impact that has on the financial outlook for the company, the products that they're selling, and how it affects their financial outlook. So thanks for paying attention and watching. If you could please click the like button, it really helps the channel. Again, this is a new channel. I'm hoping to grow it. And I love talking about this stuff in addition to talking about travel and remote work. And I'll continue to talk about it as well. If you think this is a benefit to anyone, please share. If you want to continue to get notifications about what's happening, click subscribe and the notification bell, and you'll be notified when the new videos drop. As always, I really, really appreciate the support. If you have any questions or comments about the wheel strategy or advice, you want to give me your take on it, that's totally cool too. Again, I'm a newbie. I don't know anything, if I'm being honest. And, I talk to some people offline, and I'm in a couple of Discord groups and things like that. But I always like to hear a different opinion. So if you have another opinion, another angle, please share it in the comments. Love to hear it. And I wish everyone the best on your own journeys. And I really appreciate it. Have an amazing day, and I will talk to you next time. Cheers.